welcome. You're watching Buy Now, Sell Now. This is the show where we take in stock-specific queries from all of our viewers and break them down to give them our market guest advices. But before we get into that section of the show, let's quickly take stock of how the market is doing today. Nifty is slightly up in the green. It's at over 0.1% trading right now, with the other sectors as well seeing some pressure in the markets. Nifty small in the broader markets as well. Small caps is also in the green, with the mid caps also seeing the buying that we are seeing in the benchmark indices as well. Nifty IT, that is one of the star performers of today's trade. That sector's up almost 3.7% in today's trade, with other sectoral indices also gaining quickly. So it's looking like quite a good session for the Nifty. Nifty Bank, on the other hand, that one is seeing some sort of a pressure, down about 0.2% today. If you look at the VIX, that's trading quite flat as well, 0.16% only. Nifty small cap, entire indice, that section of the market is also in the red, down about 0.5%, while the mid caps are seeing some strength as well. Kavita, how do you see the markets today?
All right, so right now it's really flat and Nifty barely holding above 24,000. But then, yes, a lot of stock-specific action, and that is where you need guidance. And here we are with our experts joined live. We'll be answering your stock-specific question. Rajesh Agrawal and Kunal Bothra with us today. Hi, good morning, both of you, and welcome to the show. Let's just quickly take a technical take from Kunal. Kunal, market looks flat, but the IT and reality definitely in terms of sectors who are going up and firing up. A lot of stock-specific action. How are you looking at the major as well as the broader market index?
See, good morning. First of all, I think it's a very interesting kind of a market. One, because the Nifty is holding on to that 24,000 mark broadly on the spot levels. The Bank Nifty is the one which is underperforming. But then on the sectoral tilt, I would say that there are new leaders which are emerging. The Nifty Realty Index has done very well. IT stocks apparently have looked quite strong so far. I think it's up almost 14-15% so far in this month. And then you're looking at many of the other individual stocks which have started to look attractive, the QCOM space, etc., Eternals, etc. So I would sense that we are in a phase of the market where the ones or the sectors which have performed very well, they are the ones which are continuing to charge premium, and the ones which have underperformed, they are the ones which one has to stay away. For example, the private sector banking names, the PSU banking lot. On a RS scale also, relative strength scale also, I think these sectors have underperformed so far in the last 3 or 4 weeks. So I think that's where one has to try and take some bit of caution.
All right, let's quickly jump into the stock-specific queries part of our show. That's the most interesting part, and why all of our viewers watch as well. The first query that we've got is coming in from Mr. Pinisetti. The stock in focus is SBI, and he's looking for a recommendation of whether he should hold the stock. He's acquired these stocks at an entry price of 1,020, sitting at a bit of a loss on that front. Kunal, what's your take on this stock?
See, I'm assuming that if it's a long-term kind of a time frame, then you can continue to hold on to SBI. It's a quality stock. It's going through a bit of a corrective phase. But then, we've seen the pedigree of the stock in the last many years, that the stock has a tendency of making a very strong and a roaring comeback. Be it the case in mid of 2025, when the stock was almost at 850, 875. From there, the stock moved up to 1,200 plus end of 2025 or start of 2026. So I would sense that it's more like a resting phase for SBI. You need to have a time frame which is at least medium to long term. If that's the case, I would suggest to hold on.
Okay, let's move on. This question is coming in on WhatsApp from Nitin. He's from Nashik, and he wants a fundamental as well as technical take on 2 counters. Good time to average Siemens, and the other one is BSC. Okay, so let's go with the fundamental take first. Rajesh, so he has bought BSC at 2407, and for Siemens, the entry price around 3516.
Good morning, Kavita. Good morning, Mariel. Good morning, Kunal. Taking one by one. Siemens 3516, I think it's Siemens Energy, if I'm not wrong. Strong company, no doubt on that. Good order book. It has been recently demerged from the Siemens Limited, and doing very well. They are doing capex too. Going forward with the kind of demand generation which we are witnessing, I think these kind of companies are going to do well. Every dips should be taken as an opportunity to accumulate. As far as BSE is concerned, BSE is a strong buy from our side. They have different segments like capital market where they give equity derivatives sort of thing. In mutual fund, they have Star Mutual Fund. In Gift City, they have their presence for international market, 15% holding in CDSL, strong balance sheet, debt-free, doing very well. And the best part is the FNO market share, which was almost zero some time back, they have gained considerable numbers there. And Sensex and Bankex are doing very well. The correction from almost 4,400 to 3,500 is giving a good opportunity for a long-term investor. By long-term, I mean at least 1 year or 18 months. If somebody is ready to hold that kind of time for that time horizon, one can even accumulate at that. Somebody holding can hold both these stocks.
All right, you can hold, but then can you also average, and what should be the level at which you should be proceeding with an average strategy, Kunal?
See, I would suggest to not average at the current levels for both of these names. Now, I understand that both Siemens and BSE are top quality names, but on the longer term charts, it looks like that these stocks are now going through their patch of mean reversion. They could drop by another few percentage points near term wise. So I would suggest to just wait for maybe another few weeks. Let these stocks confirm maybe one more round of correction. That's where I think better price points could originate.
Right. So wait for one more round of price correction when it comes to Siemens and BSE. The next stock that we have in focus, it's a query coming in from Sagar. He's asking about HDFC AMC. He's holding 23,000 shares at an entry price of 29, and he's not mentioned his horizon. So we'll just continue to take sort of a fundamental view on this stock. Rajesh, is this a name in your coverage?
Yeah, for a long-term horizon, one can continue to hold. AMC business as a whole is doing very well. HDFC is the second largest AMC at this point of time, doing very well. The kind of SIP numbers which we are witnessing month on month is giving the hopes that AMC business is going to do well. And the fact remains that HDFC AMC has a large portfolio of equity. That's a high margin business. So continue to hold.
All right, so that's the take on HDFC AMC. But then let's move on. We have a viewer on the phone line also, Mr. Thomas George from Cochin. Hi, good morning, sir. How are you doing today?
I am fine. Yeah.
All right, sir. You can ask your question. Our experts can hear you.
Yeah, I can. I have got two companies in my watch list.
Okay.
One is Other Energy, and the other one is Either Industries. So one is in two-wheeler space, and the other one is in specialty chemicals.
Right.
I would like to put some money in any one of these two companies, and for the long term, which of these would be a better bet?
Okay, so almost 12 months time horizon, is that right?
Yeah.
Okay, so let's take a fundamental as well as technical take. The buying strategy Kunal would be answering on, but then Rajesh, which one would you choose?
At this point of time, I would avoid both. Both have run up quite a lot after the news came in that as a government is putting some money into Ether Energy. They ran up quite a lot. The numbers were okayish type, but I don't think at these levels somebody should enter. Even in specialty as the other one, the entire sector is not performing that well. So if somebody has to be in those kind of business, maybe a large cap names like a Balaji M Mines or a sort of thing, Lakshmi Organics would be a better name.
All right, so there are better names, Mr. George, which Rajesh is recommending. Otherwise, both the counters can be avoided. But what's on the technical chart? And since we are talking about technicals, Kunal, do you think a short-term strategy is advisable in any of these counters, or even you would recommend a complete quit?
No, I'll recommend maybe a buy on dips on Ether Industries. I think that's a chart which is looking attractive. So, what's happened is over the last 3 or 4 quarters, the stock has done very well. But then I think, the only concern is that you'll have to try and strategize your entry, because current levels, the stocks are looking a little overstretched. Maybe you'll have to wait for dips. If dips don't come by, then you'll have to try and, add up quantities on minor corrections for the stock so that you can, get your average price as lower as possible. I would suggest that should be a style and a strategy which you need to adopt. And yes, a time frame of at least 12 months to 18 months is required, because what's happened is that, for example, Ether Industries, the stock has moved from 720 levels to 1500 in the last 4 quarters. There could be a possibility that for the next 1 or 2 quarters, the stock may remain sideways. And then the momentum would come back again, maybe in the second half or in the subsequent 2 quarters post that. So you'll have to be a little bit more patient over here. And that's why you need to have a time frame of at least 12 to 18 months or more into these stocks.
All right, so a buy on dips is what we're getting on Ather Energy. The next query is coming in from Davda. He's asking about Bondada Engineering. He's holding about 200 shares at an entry price of 421. I'd like to take this to Rajesh. What do you think about this stock and how is it placed in the broader engineering space?
Try to exit on every upticks, I would say. All the positives has already been discounted after the listing. They gone up quite a lot. And at this point of time, I don't find any reasons to believe to be in the stock. So try to exit on any upsides.
All right, exit on any of the upsides, that's recommended. But with that, it's time for a short break. Post that, more stock-specific queries are being answered. So do not miss the opportunity. Keep sending us your questions. The number is flashing on top of the screen.
Welcome back. You're watching Buy Now, Sell Now. And without wasting any time, let's jump right into the WhatsApp queries that we're taking. The next query is coming in from Shankar, contacting us from Delhi. He's asking about Bank of Maharashtra and Nippon Life for a long-term perspective. Mr. Rajesh, tell us, do you cover these stocks and what's your outlook on them?
Bank of Maharashtra, strong performance in the last 2 years. Every quarter, the numbers have been improving. Asset quality has improved. They have raised money. Capital structure is good. And the kind of growth the bank has shown in the last few quarters is one of the best in its peer groups. I think even if after this kind of run up from almost 40 odd levels to 80 plus, there are bright chances that in the next 6 to 9 months, with the kind of performance, we might see the stock going into 3 figures. So one can accumulate the stock on dips. The other one you said?
The other one's Nippon Life, sir.
Nippon Life, yes, one can carry on. But as far as AMC business is concerned, as I discussed earlier, SBI AMC or a HDFC AMC would be a better bet.
All right, let's move on and let's take this question. This is coming from Mr. Sarabjit Singh Kalsi, and GIC Housing is the stock. Entry price is 345. The other stock is DCB Bank. The entry price is 140, and he's been holding these counters since a decade now and wants to know when he can sell or maybe switch to any other counter. Well, I wonder why is he not booking his profit in one of these counters. But all right, Kunal, let's give him a short-term strategy.
See, short-term wise, I think GIC could still underperform. It looks like, because the stock is struggling to even hold above its long-term averages. The near-term trend, the short-term trend is still negative for GIC Housing. Maybe I think switching on to some other name in the similar sector could be a slight better strategy. Maybe few of the prominent performers in that space could be a better strategy if you're looking to take that switch. If not, then you can continue to hold on and just wait for the point where the stock starts to come back into an inflection zone, where it starts to come back at least in terms of at par performance with respect to the sector. For DCB Bank, I think it's a good stock to hold on to as of now. The near-term charts are still bullish. We've seen the weekly and the monthly indicators are still in the bullish territory. The stock has to confirm a breakout about 205 mark. So I think if the stock happens to give a breakout about those 205 levels, then there are higher targets which open up for the stock around 240, 245 on the long-term basis. So assuming if a time frame is long-term, just wait out for a point where DCB Bank crosses about 205 levels. Then you can trail your stop losses and continue to ride the momentum on the upside.
All right, that's the take coming in on DCB Bank. Now, our next query is coming in from Arvind Desai. He's holding Ramco Systems and he's holding 30 shares at an entry price of 933. He is currently sitting on a loss on this counter and he's looking for ideas to switch out from this stock. Kunal, what opportunities do you see in the market right now for this viewer?
See, I think for the stock, specifically for Ramco Systems, I think the viewers bought or purchased at an extremely high price. And I think on 7th of July itself, the stock had actually made a high of 930, 960. And from there, it's fallen very sharply towards 600 levels. It's into a lower circuit right now. So I'm not sure, at what price point will the stock open from this lower circuit. But you'll have to be a little bit more careful. The stock may retrace back towards the 200-day moving average. If you're looking for a current opportunity, want to replace this capital towards some other name, then I would believe that maybe shifting on to IT stocks or realty names or buying on dips could slightly be a better strategy from here on, assuming if your time frame is 6 months to 1 year at least into these sectors.
Okay, next question is specifically for Kunal. This is coming in from Mr. S. Vidya from Chennai. And MV Photovoltaic wants to know the level where he can accumulate more for a long-term strategy. Entry price is 290.
I don't track the stock, so I'll have to give it a skip.
All right, Rajesh, would you like to cover this?
Even I don't track.
All right, let's move on to the other WhatsApp question. This is again from Ramya and the stock is Eternal. Entry price is 239. Wants to know if it's the right time to hold or can wait for long if there's a good outlook. Rajesh?
See, Blinkit has started performing, no doubt on that. The numbers is showing that. They have increased the dark stores. But the problem is increased competition, whether it's from Instamart or Jio coming in, or even Flipkart has given a sound that they are going to enter into grocery business. Competition is hotting up, no doubt, and Zepto issue is also in the anvil. So the only issue at this point of time is Zepto, and it would be the survival of the fittest kind of thing going forward. But at these levels, I think one can continue with Eternal for maybe a 10% upside from these levels in the next 6 months.
Right, so that's the take coming in from Eternal. But on that note, let's slip into a very short break. But don't go anywhere. We'll be addressing more of your stock-specific queries on the other side.
Welcome back. You're watching Buy Now, Sell Now. We're answering your stock-specific question. This next question is again a WhatsApp question. This is coming in from Mr. K. Setu Madhavan from Coimbatore, and the stock is L&T. Entry price is 4050. Wants to know what should be done at the current rate. Okay, so the results are due today, and the expectation is almost around muted results. Rajesh, I'll go with you first.
Kavita, if the gentleman has a time horizon of 12 to 18 months or even longer, it's a buy from our side. Every dip should be taken as an opportunity. With 6 lakh crores of order book, I think it's one of the best companies. It's a proxy play if you believe that Indian economy is going to do well. And the best part is the major part of order comes from Middle East, and with the kind of restriction which we have seen in Middle East, I think going forward, the order inflows are going to be great from those sides. 1 or 2 quarters might be muted because of various reasons, but a company like L&T should be held for a long-term portfolio.
12 to 18 months view, you should be holding on to it. Kunal, a short-term strategy?
Short-term, see, results, as it is, we don't recommend stocks just prior to the results.
Right.
So I'll probably skip that. But assumingly, if post-results, say if there is a 3-4-5% correction for L&T, and if the stock comes closer to, say, 3,700 mark, then I think that could be a good point where you may consider average out. Because, L&T is like a proxy towards the benchmark indices. We've seen points where L&T has a 75% plus kind of a correlation with respect to the movements on the Nifty 50 benchmark indices. So which means if you're bullish on the index, I think L&T has to become an integral part in terms of the performance over there. So it all depends on your time frame, your view which you're looking at. If you're bullish on the markets and if you're looking to hold on to these solid stocks from a long-term perspective, then buy on dips is what I would advise for L&T.
All right, a positive view with a buy on dips coming in for L&T. The next query coming in is from Dilip Roy. He's asking about Dabur. He's holding 50 shares at an entry price of 428. And he wants to know what the target will be. Well, looking at the current market price, he's sitting on only a marginal profit right now. Kunal, what's your view? Do you see further upside from here?
Yeah, I think FMCG stocks overall have underperformed over the last many months. Over the last, I think, 7-8 quarters or so, we've seen stocks like Dabur, for example, falling from 650 levels to 400, 430, where it's trading right now. So this could be an opportune time for traders who are looking at building their portfolios around these FMCG stocks. Of course, time is something which could be tested because these stocks have a tendency of going into consolidation, trading ranges for many months on a trot. So assuming if you're looking at this as a long-term bet, then I think having names like Dabur, adding on to other FMCG stocks like maybe Nestle, Britannia, etc., could be a good proposition.
All right, let's move on. And on the side of the screen, you can see live visuals coming in from HUL earnings press conference, which will start anytime now. But then before we slip into more queries, Rajesh, a quick take on HUL. See the numbers. We did see a decline in consolidated net profit to 2673 crore for the first quarter. That has missed a lot of analyst estimates, due to one-off tax credit. But is it a long-term story over here if one wants to buy at current levels, Rajesh?
The numbers have been muted. I have no doubts on that, and it has been muted from last 2-3 quarters because of various reasons. One, the commodity prices have affected the margin. Two, there have been a lot of competition from online new businesses which has
Rajesh,
come
the
in.
press conference has started. We'll take a quick take from you later, but then let's just cut across the management first.
The operating context. The quarter, as you know, was shaped by an uncertain global environment characterized by geopolitical tensions, volatile commodity and currency markets. Against this backdrop, India as an economy demonstrated notable resilience. The economy benefited from solid foundations built over a period of time. During the quarter specifically, coordinated fiscal and monetary policy actions helped to manage energy security, inflation, and currency volatility that we know. In all this context, what we saw was that the FMCG demand environment remained stable, reflecting the underlying strength of consumption as well. In this entire context, as you saw results, we delivered a turnover of 17,184 crores with an underlying sales growth of 10%, driven equally by volume and price. This marks our highest growth in 13 years. We progressively stepped up performance from 3% in first half of FY26 to 10% in this quarter while strengthening our competitiveness. What's more heartening is that our bottom line has also grown double digit, and I'll spend some time on this later on. We delivered this performance in a volatile environment through competitive modes built over time. First, our global supply chain network, R&D agility and manufacturing capability ensured continuity of supplies and faster response to market demand. This helped us to maintain service levels during this period of supply crisis as well. Second, our resilient portfolio straddling across price-benefit pyramid and strength of our brands enabled us to implement calibrated pricing actions while preserving the consumer franchise. Third, despite the cost pressures, we continued to invest behind brands by stepping up absolute A&P spends to the highest level in the last 11 quarters. We further strengthened our omni-channel presence by growing distribution in general trade and continuing offline expansion of digital-first brands such as Minimalist and Simple. And finally, our financial agility enabled us to balance near-term pressures with long-term value creations. That brings me to the overall consolidated results. Our EBITDA margin at 23% was within the guided range. Our absolute EBITDA grew 8% year-on-year, while profit after tax before exceptional item grew 9% year-on-year. The reported profit after tax declined 2% on account of one-off tax credit in JQ25. The tax credit was to the extent of 337 crores. If you adjust for that, then the year-on-year reported underlying PAT has grown by 11%, which is same as profit before tax as well. This performance reflects the quality of our earnings, which means double-digit top line and double-digit bottom line growth and resilience of our business model. Moving to segment performance for the quarter, Home Care delivered 14% USG, driven by high single-digit UVG. This marks our strongest performance in 3 years. Both Fabric Wash and Household Care delivered double-digit volume-led growth. Within this, Liquids continued its double-digit growth trajectory. We continue to see inflation in crude-linked derivatives and are taking calibrated price increases across the segment. Beauty and Wellbeing delivered 12% USG, driven by high single-digit UVG. Within this, Hair Care delivered another quarter of double-digit volume-led growth, driven by premium hair care. We further strengthened our market leadership during the quarter. Skin Care and Color Cosmetics business grew in high single-digit, led by double-digit growth in premium skin care. Within this, Minimalist recorded double-digit growth and continued to expand aggressively in offline channels. Oziva saw a near-term softness. We continue to invest behind the portfolio and are confident of its long-term growth potential. Coming to Personal Care, the business delivered 4% USG driven by pricing as this segment continued to see palm oil inflation for the second consecutive year. Skin cleansing grew mid-single digit. Premium bars and body wash within that continued its double-digit growth trajectory led by volumes, which is outlining our premiumization strategy in personal care. Oral care delivered mid-single digit growth with premium innovations like Close-Up White Now continuing to gain traction. Foods delivered USG of 7%, which is again a step up of growth sequentially, driven by mid-single digit UVG. Premium tea within this reported low single digit UVG, while coffee delivered double-digit volume-led growth. Lifestyle Nutrition, which is Horlicks and Boost, delivered double-digit growth in this quarter. This is its 5th consecutive quarter of positive UVG and a strong growth. During the quarter, Boost crossed the 1,000 crore annual turnover milestone, making it our 21st brand to be in the 1,000 crore club. Packaged Foods delivered high single-digit growth. We expanded Kisan Chutneys with 2 new variants during the quarter and continues to see step up as we move forward. As we continue to deliver the short-term performance and step up, we are investing ahead of the curve to build capabilities and remain future fit in marketplace. A powerful example of this commitment is the launch of Unilever Fragrance House in India. It brings together the science of fragrance creation with consumer insight and artificial intelligence closer to one of the world's fastest growing markets. Our liquid labs of the future in Mumbai is another such example. The lab can accelerate formulation development timelines by up to 6 times to respond with speed to consumer needs. In supply chain, our Haridwar and Sonipat factories were recognized by World Economic Forum's Global Lighthouse Network for supply chain resilience and sustainability categories respectively. HUL now holds 8 WEF Lighthouse designations across 6 sites, the highest for any company in India. And finally, we are embedding AI across our value chain. An example of this is our first digital distribution center in Vijayawada, where AI-embedded real-time visibility creates a digitally orchestrated fulfillment ecosystem to serve consumers better. Taken together, these investments are building the foundations for long-term value creations along with many others. Now coming to our midterm outlook. The economy continues to be resilient and we expect the consumer demand, FMCG demand, to remain stable. Having said that, we continue to monitor the progress of monsoon and evolving geopolitical developments. Backed by the actions that we have taken, we remain confident that fiscal year 27 will be better than fiscal year 26, which has been our guidance so far. And we expect the consolidated EBITDA margin to be around the current guided range, which has been our medium-term guidance. Our focus remains clear and unchanged. Drive competitive, volume-led growth anchored to our key strategic priorities. With this, I conclude our prepared remarks and will now take questions.
You were going to go first, right? Good morning, Priya and Niranjan. If we see your EBITDA margin, the calculated margin is below 22%. It's 21.7. So for this financial year, are you expecting to revise your EBITDA margin lower? If you're expecting to keep the EBITDA margin in the 22.5 to 23.5 range, what gives you the confidence? Is it the monsoon? Is it the consumer demand? That's one part of my question. My second question is, if we see volume, again, a bit subdued growth in the first quarter. So for the overall year, what's your outlook on your volumes, on the underlying volume growth? And the third question is, what's the outlook on raw material pricing, especially for commodities, tea, coffee?
Maybe I'll take the last part of the question first, and then
Yeah.
Niranjan can add. So in terms of inflation, it remains a volatile environment. And we are closely monitoring, both the geopolitical situation, the monsoon conditions in the country. And we believe that in September quarter, we will see sequential inflation. This could be depending on how inflation pans out, between 2 to 5% sequentially for September quarter over June quarter. And we will take calibrated price increases as we have been taking in June quarter. The same we will do in September quarter, but really leverage all the lines of our P&L. So it remains volatile. Given our portfolio, which spans across and spreads across both categories and the depth of our portfolio across price architecture, we believe that we are in a good position to ensure that we navigate this.
And coming to your EBITDA margin, I would like to correct you. That if you look at the consolidated EBITDA margin, which is what we report, it's actually 23%. And our EBITDA guidance is also on consolidated EBITDA margins, which is 22.5 to 23.5. And our margin reported for this quarter is 23%. So we are well within the guided range.
Hi, Priya. Hi, Niranjan. I think just the fact that, in the last so many quarters, volume growth has been on an uptick. I understand that this quarter there was also price hikes that has impacted the overall volume numbers. But you've mentioned that 2 to 5% is the inflation that you see sequentially as well. So when you say calibrated price hikes, is there a percentage set that you will be taking, in the next quarter or so? And do you think that for the whole year, the pricing pressure should be mostly done in the first half, and the second half is when you again start that volume growth trajectory coming in?
So I think, firstly, I'll repeat what I said. The conditions continue to remain volatile. So given the geopolitical challenges that we continue to see, we have to monitor this, and we have to monitor what happens to commodities. The other is the monsoon conditions in India, and we need to monitor the El Nino impact of the monsoon. Now, given that overall agriculture, actually monsoon has become much more limited in terms of the impact of monsoon on irrigation is more important today. But the issue really at hand is what happens with rural sentiment. And this is something we need to watch. But it depends. It depends on how monsoon pans out geographically, and also the depth and extent of the monsoon challenge that we have, if we have one. So this is the two things we need to monitor in the country. Having said that, we feel very confident and comfortable with our equation between price. It's a very balanced equation between volume and price. With 5% volume and 5% price, this is a good balanced equation. We also are very competitive and continue to drive competitiveness in the quarter. So for us, this bodes well going forward.
And just on the fact that monsoon plus there's price hikes, which has overall impacted rural demand, which was seeing a recovery last quarter. So what is your sense there in terms of rural demand versus urban demand going forward? What is it going to look like?
Yeah. So So firstly, we see rural demand continuing to be stable and robust in the quarter. So in the quarter that's gone by, June quarter, we see both urban and rural demand continuing to be stable in the quarter. So that's really our outlook going in. We have to keep watching, like I said, in terms of the monsoon and in terms of geopolitical impact on inflation. But given all the measures that have happened in the country, both in terms of the monetary measures, fiscal measures, the demand in the country remains consistent, remains stable. Niranjan, if you want to add.
No, I think just a couple of probably builds on that. Even on the volume point, even with the price hike of 5% UPG that you saw in the quarter, the volume has only come off from 6 to 5%. So really speaking, a 5% underlying volume growth with that kind of trajectory, again, actually is a strong evidence of our portfolio that straddles across the price benefit pyramid and our brand power, plus our broad-based growth. So the growth is not just coming from a category, it's coming from across, whether you look at a laundry or a dishwash or a hair care or a beauty or a foods or a Horlicks. So it's a very broad-based growth and not just a category which could be impacted by inflation. Yeah. Okay.
Hi. So you've called demand stable, but like we've seen, growth has improved. So do you see a progressive improvement in volumes going forward, or do you see them settling, or what's the normalized range that you're looking at? First is that, and secondly, also you said Boost has entered the 1,000 crore mark, and Horlicks Superfoods is also seeing the traction. So does this mean that category is now sort of turning around, and what's the roadmap to make that the growth engine and also the outlook on the personal care segment?
Yeah, so let me begin with the lifestyle nutrition category. Our lifestyle nutrition category has now seen 5 quarters successive, continued good, strong growth. And what's behind this is really what we've done behind the brands. So we've gone back to talking about the basic needs for nutrition. With the Horlicks Superfood launch, we've gone back to talking about the ingredient storytelling in Horlicks. This has done extremely well for us. Combined with the changes in pack price architecture, this is the reason we are continuing to see now a volume step up. With this, we've also entered into Horlicks with Horlicks Protein. This is a new entry we've recently made, and we remain confident of the opportunity that exists in India. There's a huge headroom in India for supplementation of health, and this is just an area which we're beginning to enter with the Horlicks Protein business. So that's really what I wanted to add. Niranjan, if you want to add.
Yeah, I mean, just building on, again, on this point, as far as volume is concerned, so you see one, demand being stable, our trajectory improving, which also is a function of our competitiveness improving. For instance, we have hit a new high on our laundry market shares, on our hair market shares. So market share improving as well, again as a consequence of all the actions that we have been taking so far. Yep.
Back here watching Buy Now, Sell Now, the last leg of the show where we are putting the spotlight on HUL. Before the break, we saw the management commentary on the revenue and profit front. But then look at the stock, it's almost 4.5% down. And if we look at the results, and Kunal Bothra is also there with me in the studio, we'll talk more on this. Kunal, all right, so 3% year-on-year decline in net profit. And revenue, however, rose almost 10.2% to 17,149 crores, driven by 10% underlying sales growth. But the stock is really down 4.5%. Kunal, how are we looking at the stock technically, and looking at this current trajectory, is it a time to initiate fresh buys or one should hold on?
I think one should hold on, not venture into the stock as of now, because on two fronts. One is that the stock has confirmed a break of a major support at 2,100 levels, which has been a support for the stock, holding on to the stock over the last 3 months or so. The second and the more important part is that the stock has been relatively weak with respect to many of its other peers. Now, even if you do a simple relative strength comparison with respect to, say, Nestle, Marico, Britannia, Dabur, etc., the stock has underperformed. So I think on both fronts, it looks like that I think it's better to just wait for this final leg of correction to play out. Maybe I think if we get the stock another 60, 80 points lower at 2,000 odd levels or slightly below that point, that could be a good entry point for HUL.
And someone who's already holding it, what will the stop loss recommended?
See, right now, of course, the stop loss for the stock was already 2,100 for the stock price. But if you are already holding on, I would sense that sub 2000 could be a good price point where you can look to average so that you can bring your average cost price lower.
All right, let's put a spotlight on Coal India also. Stock is down almost 2.5% over here. Definitely after Q1 result, we've seen this downtrend coming in Coal India, but then the trajectory has any which way been very subdued. Kunal, what's going to be your quick take?
See, for Coal India, I would be a little skeptical. Two fronts. One is that the stock over the last 3 quarters, or 3 months rather, has gone through a correction. It's fallen from 480 levels to now 410, 415 mark. There could be a possibility that the stock may correct a little bit more further or drag for itself. And the second, the critical part is that the PSU sector or the index on RS basis is also looking quite weak. So I think on both fronts, it looks like that Coal India is more of a delayed buy, not at current levels.
All right, that's the take coming in on Coal India and HUL also. We listened to the management call earlier. But thank you so much, Kunal, for all of your views and for helping our viewers make their investment decisions as well. Thank you so much. Right. We're trading, Nifty is still trading up slightly, marginally, only up about 0.08%. Nifty IT still holding very strong, almost touching that 4% mark in today's trade. Thank you so much for watching. On that note, this is the end of this segment. Thank you for watching Buy Now, Sell Now and sending in all of your stock-specific queries. We'll meet you tomorrow, but don't go anywhere. We've still got a lot of market updates coming your way right after this very short break.